Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index hovered just above 98 into the end of last week, staying broadly flat as investors weighed the outlook for further Fed rate cuts next year. Data leaned dovish. November CPI cooled to 2.7% and core inflation eased to 2.6%, the slowest pace since early 2021. DXY remained heavy within roughly 97.8 to 98.8 with macro headwinds still pressuring the dollar longer term. WTI broke down sharply last week and then consolidated at depressed levels, printing its lowest prices since April. On December 16, WTI fell through the key $55 per barrel support, a significant technical break that confirms the medium-term downtrend. From December 11 to 16, prices fell 4 sessions in a row, down about 5.3%, pushing major benchmarks to multi-year lows. Spot gold spent last week consolidating above $4,300, trading in a high-level range as the market digested mixed central bank signals and elevated geopolitical risk. The Fed cut 25 basis points, but the dot plot suggested only one cut in 2026, highlighting growing internal disagreement. Slowing global growth and ongoing geopolitical flashpoints continue to underpin safe haven demand, though diverging policy paths remain a key risk to watch. The yen was volatile last week after the Bank of Japan raised the policy rate by 25 basis points to 0.75%. Despite the hike being largely priced in, the yen's strength proved short-lived, and the pair pushed back toward a one-month high around 157.7. Governor Ueda emphasized that policy remains accommodative and real rates will stay deeply negative, which tempered expectations for more BOJ hikes in 2026. With risk sentiment improving and the dollar finding support, yen rebounded and traded just below 158. Euro pulled back from a 2-month high near 1.18 to the 1.17 area after the ECB left rates unchanged, offering limited forward guidance. Policymakers described current rates as broadly neutral and reiterated a meeting-by-meeting, data-dependent approach rather than committing to a set path. Staff projections still point to inflation holding close to 2%, with 2026 headline inflation seen around 1.9% and core inflation only dipping slightly below 2% in 2027.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.